I haven't really heard much. I have heard that lenders are having to, are asking for these addendums and these agreements up front to make sure they calculate, all the fees and points and concessions and who's paying what properly and looking at funds and all that up front so there are no surprises at the end. Other than that, I haven't really heard much about it.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Newport Beach. Happy Labor Day. We are here. A few families over here hanging out. We got the moms out there on the paddleboard, kids out there. This is called the Dunes. It's like a little area inside the Back Bay washout. My neighborhood's back that way. Labor Day, okay, we're still working. Getting the video out, get some content out, answering emails. It's always busy. A few weeks post NAR settlement. I'll give you an update on how that's going, and we'll talk about a whole bunch of stuff. PCE, recap, Jobs Week coming up. It's a huge week and a short week. But happy birthday, Warren Buffett. Probably the arguably the greatest investor ever, certainly asset allocator. He's 94 this past weekend. The first non-tech company to reach $1 trillion market cap was Berkshire Hathaway. I've been in it since 2004, the B shares, not the A shares. I remember looking at it going, one share of stock costs $105,000 freaking dollars. It's over $700,000. Look it up, Berkshire Hathaway. There's the A share and the B share. Pretty impressive. Just long, slow, boring growers, like our industry, right? Trains, insurance companies, financial services, Bank of America. Apple's in there too. He just trimmed a big position there, probably his best winner ever. Sit on $270 billion in cash. Not bad. Okay, so the PCE came in at 0.16. Now, because it was 0.16, the media says 0.2. If it was 0.14, they would have said 0.1. And then the markets react to that either way, just like they reacted to 18 months of fake jobs reports. Where 800,000 jobs were misquoted. Anyway, so PCE, the personal consumption expenditure, is down to 2.6. And I think the core stripping out food and energy were at 2.9%. So as expected. So good numbers for inflation, but labor is what matters more than anything right now. We're looking at labor. Labor is the big deal, and it's Jobs Week. So obviously we end this week, the first Friday of the month, with the BLS, Bureau of Labor Statistics, non-farm payrolls. So we will get the August jobs report, and we will see if it's on average 175,000, or if we're going to have some more overstatements or whatever the case may be. So we've got ADP payroll, we've got jobless claims. Our continuing jobless claims is around 1.9 million. It's been sticky. The Thursday weekly one that we get, kind of like the first look at people filing for unemployment, that continuing claims number has been creeping higher. So even though the weekly jobless claims has not necessarily been rising around that, above that 230, 224, 220,000 jobless claims every week, people aren't getting back into the labor force. And that is a sign of weakness. And so we're kind of on recession watch, right? And so hate to say that and bring it up, but it's true. There are, farming is in recession. If not for cattle, farmers would be getting crushed. Corn farmers, pig farmers, it'd be really tough right now. So housing, we went through our recession. Manufacturing's been in a recession. We don't really manufacture that much in this country anymore anyway. We're mostly a services economy. So rolling recessions, global, do we have I'll say global. In the United States, do we have, all sector recession? Unlikely for now, unless something catastrophic happens. So far, GDP came out pretty decent, 3% GDP read for Q2. That's a good sign of growth. And we get some PMI services and global data the next couple days, talking about pricing and job growth and whatnot. So we've got a lot of information this week. The job opening and labor turnover report is another one, the JOLTS report. So we'll take a look at that. Okay, let me get some interesting tidbits, just random stuff. But before I do that, one last housing update. The trigger lead bill that is the Haggerty-Reid bill in the Senate, which we're trying to get tagged onto the Defense Act, that could get us this ban on trigger leads is what we all been looking for. So we'll keep an eye on that. Kudos to all the organizations out there working to make that happen. MBA, Community Home Lenders of America, CMLA, we've got BAC, which I'm on the board there, Broker Action Coalition. We have a lot of stuff. So lots of efforts to try and get that to go through. We'll see if it goes through. It is an election year. It's very interesting to see what goes on here. Remember, polls before Labor Day don't really matter. They really don't. It's polls after Labor Day and, of course, after the debate. The last debate that the presidential candidates had rocked the entire election. So, polls matter now going forward. They don't really matter before Labor Day. So let me just throw in some random stuff. I saw that wind and solar energy is outproducing coal. Thought that was interesting. 1 in 5 jobs in America require a government license. Now, it's mostly state licensing that's required. But think about that. 1 in 5 jobs in every state requires permission to get a job. You have to get a license to get a job. Talk about government overreach. I saw, I think Greg Shear put a great post out there talking about the yes in my backyard, not my backyard. Local politics. Okay, local politics. As far as municipalities and I guess I would say permitting and zoning and whatnot. That's really what happens. Makes a difference as far as housing is concerned and all that. So anyway, something to take a look at. Sorry, but my kids are out there. I thought I'd take a look at them. We got literally 14 kids between our families. Anyway, so that I thought was an interesting one. 1 in 5 jobs requires permission from the state. And we'll follow up on the yes in my backyard, not in my backyard debate on the last word put on by the Christmas commentary. We'll have another show this Friday before I jet out of town to watch those cheaters up in Michigan get beat by my Longhorns. I'll be there in Ann Arbor. Looking forward to it. And I guess the only other noteworthy news that's out there is, other than Jobs Week and the election, is that rates are down. And we're a few weeks removed from the NAR settlement. And so I keep asking everybody, what are you guys hearing out there? Tell me down below. What are you guys hearing about having, to do the broker agent commission, the buyer side agent commission agreements and all that kind of stuff? Tell me how that's going. I'm curious how it's going out there. I haven't really heard much. I have heard that lenders are having to, are asking for these addendums and these agreements up front to make sure they calculate, all the fees and points and concessions and who's paying what properly and looking at funds and all that up front so there are no surprises at the end. Other than that, I haven't really heard much about it. It's a pretty big deal. I mean, it's a big market mover. So anyway, one last little view here. This is the dunes. Pretty cool little area. You can bring your RV over here, or you can get these little cottages they got. You got RV spots. That's PCH right there. Always active over there, PCH. We hear all the fire trucks. And here's Fashion Island. We had some crime here lately. Some punk asses from LA coming in and had a shooting, someone tried to rob someone for their watch, and this poor old lady from New Zealand in her 70s got killed. Anyway, don't even get me started. All right, have a wonderful September. Let's go. Hey, it's KP coming to you live from Corona, California. It is changing of the seasons. We're going from summer to fall. There's a rotation in the stock market. Money is flowing from one place to another. Rates are coming down. It's Jobs Week. There's a Fed meeting coming up. So let's talk about everything and get it all out. I am going to do another video Saturday, hopefully, from a very cool place called the Big House. And if I'm lucky enough and it's not too noisy, you might even see me with my good friend Garth Graham over there at Stratmore as my Longhorns take on and whip the you-know-what out of Michigan. Be an epic battle for sure. Then headed straight to Denver that evening after the game. Going to meet with CEO and founder of Halcyon, Kurt Donaldson. Going to go catch a concert at Red Rocks. Going to go see Smashing Pumpkins and Green Day. And then I've got closed-door meetings, 9 a.m. at the Mortgage Collaborative, the reason I'm in Denver. Looking forward to seeing good friends, Zactus there. Tom Gallucci, Shelley, Crockett, they're all there. They're hosting a dinner together with Halcyon Sunday night, and so will Rice Park Capital, Chris Bixby. And Zactus has got a new product out, Zactus 360. I'm looking forward to hearing more about that. there till Wednesday on the road. You know how it goes. It never ends. It's conference season. Okay, so speaking of seasons, the most important thing this week comes out tomorrow, which is why I wanted to get out 3 videos. Get all this crap off my mind tonight, and then get ready and clear the deck for the big jobs report. The jobs report is the BLS, Bureau of Labor Statistics. It is the August jobs report, non-farm payrolls, and it is a big bellwether right now for the Fed, who is looking at labor, which is weakening or softening, not breaking yet. And so there's a big difference. And so as the 10-year, 2-year Treasury yield curve has officially uninverted, it closed uninverted. That means the yield of the 10-year Treasury is higher than the 2-year Treasury yield. And that's how it normally is in a normal market, except when you go from an inversion of those two to uninversion, that usually means there's a recession coming. So we'll see. We do have slowing growth, not breaking growth, going from 3% GDP to maybe 2.5% GDP this quarter. At least that's the first read, but it's only September, so we'll see what the rest of the readings come out for July, August, and September. Okay, so what's going on in the jobs market? The jobs market showed some weakening on the ADP payroll reports. It's off by almost 30%. 140,000 jobs are expected to be created in August from ADP in their payroll data. And that's typically white-collar jobs, non-government jobs, most importantly. And you're still seeing some healthy job growth in healthcare, which you're seeing some of the money in the stock market rotate into that all year. I'm not a financial advisor. I'm not responsible for your losses, only your profits. But if you've been in healthcare, you've been making some good money. And of course, there's some jobs in leisure and hospitality, services, which we're a services economy. So the ISM services data, PMI service data came out showing that prices are still going up and services, part of our economy is expanding. And so that was information that came out today. The Challenger job report came out today. That said that a little less job cuts than were expected, but there's still a lot of cuts. And there's less job openings, as we know from the jobs opening labor turnover report, the JOLTS report yesterday. So weakening, softening. So will we get a soft jobs report tomorrow, the big non-farm payroll? That is the one thing we're all looking at, and so is the Fed. And in fact, before we go into the quiet period, which starts Saturday evening, where Fed speakers can't talk until basically 13 days from now, when they come out and have their Fed meeting, their open market committee meeting in September, we do have a Fed speaker after the jobs report tomorrow. So it'll be interesting to hear what those comments are and see what it does to the markets, which, as you know, a lot of the high-flying growth stocks, AI type stocks, NVIDIA, these stocks have been selling off. There's like a $270 billion market cap single-day loss on Tuesday for NVIDIA, the biggest single-day loss ever for any stock. It's crazy. But, they ran up so much in the last year and a half, certainly the last several years, that they've got a little room to give back. So you see some, money managers taking profits on some high-flyer growth stocks, spending that money elsewhere. We're seeing consumer discretionary stocks go up, like Coca-Cola and Procter & Gamble. That's usually what happens when there's a sign of a recession. But it could be a sign that institutional money and the flow of money that affects everything we do, credit, money, everything, is flowing into stocks that have a dividend yield. Why? Because treasuries are having lower and lower yields. How low will the treasury yields go? So remember, the 2-year treasury yield is indicative of where the Fed will ultimately cut their rates. And that we will see at the Fed meeting on the dot plot. That, to me, is the most important thing to come out at the Fed meeting. Every other meeting, so they meet every 6 weeks, but every other meeting they put up a summary of economic projections, aka the dot plots. 19 Fed members put a dot where they think GDP is going to be this quarter, this year, next year, where they think the Fed funds rate is going to be, think inflation is going to be, where they think unemployment is going to be. This is really critical data. And so will we have another reset of the market? Is the market assuming too many cuts? Is the market assuming a 50 basis point cut after tomorrow's labor data that comes out? I don't know. Odds are the Fed will do 25 basis points to start this Fed cut cycle. Once they start, they can't stop. Okay, it's typically they're just going to go. So they can always go at 25 basis point rates. Remember, real wages, real dollar value, versus inflation. Every time inflation lowers, the strength of the dollar, of the real dollar, is up there, but also the real interest rates are crushing the poor. So we have a real problem in slowing down, not just in labor, but in spending and savings and credit card debt and all those things. Having said that, the economy's still humming. A 2.5% estimate on Q3, 3% for Q2. That's still growth and expansion. So if it goes from 3 to 2.5, it goes from 3 to 2.2, that's still growth. It's slowing growth, but it's still growth. So the market has to kind of reset. So we're going to keep an eye on those things. Did everyone notice that the 10-year Treasury closed 2 days in a row under 380? That is yet another little peg down. I said a month ago we may never see a 4% 10-year Treasury again, at least not in this part of the cycle. That number may be 3.9%. What's going to make it go up? What's so strong about our economy to make it go up? Remember the first Monday of August when we had the Japan yen carry trade explosion and that contagion? The 10-year Treasury on that day got down to like 368. So is that somewhere where we could see this 10-year Treasury land in this little cycle? It got down to 3684. That was the low of the day. So could we keep making our way down as this labor inflation data softens, as growth information softens? We shall see. Speaking of the flow of money, we had some refunding on the Treasury auctions, 3-year notes, 10-year notes. A lot going on there. The money is still flowing. Japan is having a lot of problems China is having a lot of problems on growth. And they even had a meeting between some of their leadership and our leadership last week on setting up a Fed-backed relief valve in case the Chinese economy needs some help with their flow of their money, flow of their yen. It's a big reason why oil prices have come down to year lows. China's economy is not growing like it was, and they're the second biggest economy in the world. And so they're not buying as much oil and gas, and that is good for our gas prices, but a sign of slowing growth, not breaking in recessionary, contractionary growth. Speaking of outflows of money, Bitcoin saw its biggest single-day outflow earlier this week as well. Their price has come down from their record high from 73,000. Could be a time to buy. Could be a time to buy NVIDIA. If there's a $90 target, a 9 in front of the stock price NVIDIA, I would buy. Again, I'm not a financial advisor, but they've been growing at 200% every single quarter. Okay, so they're over 100% this last quarter. It wasn't 200. But the AI trade is not going away. They have this new Blackwell chip that's coming online, and there's going to be more revenue coming from that in Q4 and in 2025. Speaking of AI, Tesla caught a bid the last couple of days. Tesla's flying, one of the biggest AI plays out there. Corporate bond yields are coming down. That's good for stocks. Money searches yield, and there's $6 trillion in money market accounts sitting on the sideline. Cash is getting less valuable to stay in. So cash will find yield. Where's the yield? It's not as much in the treasuries. It probably will be in the stock market. Margin debt, FINRA margin debt, okay? That's people trading on margin, like my little gambler account I talk about every now and then. That isn't very high. It's not growing. That's not the sign of a tradable top. So money hasn't flowed into a euphoric state into the stock market yet, but it is flowing into mortgage-backed securities, and interest rates are coming down, and that's good for everybody. Last little tidbit on job information. The job openings dropped to 7.7 million, down from the consensus of 8.1, still pretty high. And then the jobless claims that came out today, continuing claims were 183, continuing jobless claims. That means we have these weekly jobless claims numbers every Thursday, and then do they continue because they can't find a job? It's at 1.838 million continuing claims. It was previously at 1.86, but it's still elevated. And productivity is up. The data this week showed that worker productivity is up. You know why? Because there's less jobs to go out and get. There's less people out there trying to find that next new job. And they're working their ass off because they want to keep the one they got, especially going into a potentially slowing economy, maybe recessionary. So we'll keep an eye on all these things. Lots going on. I will get back to you. I saw something very interesting the other day. The second biggest diamond ever was discovered in Africa at 2,400 carats. 2,400 carats. It's It was discovered in a mine that's been there since 1905 in South Africa. I thought that was pretty amazing. Get into politics real quick? Sure, why not? The House is led by Republicans by only 4 seats. There are 22 seats up for grabs. Really, 11 Democrat, 11 Republican, seen as a toss-up. The Senate, which is even split, has 2 seats that look like they're favoring Republican. You see Manchin leaving West Virginia. And so you also have Montana, which is a state that's been leaning red lately. And, of course, you've got, power at play. Oh, Ohio is the other state. So, again, polls before Labor Day don't really matter. Really, polls before the debate don't really matter. That's coming up September 10th. So, lots going on. 10-year Treasury coming down. Football season is on. Got the Kansas City Chiefs winning 27-17 against Baltimore. Great game. And it's about to get a little bit chilly. We're seeing some rotation. So, fear not. It is fall almost, and the seasons and the winds of change continue, and the flow of money keeps on trucking. Have a great week. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.